What's going on, guys, and welcome back to another video. So last week was a crazy week in the market, to say the least, with fairly substantial dips and even at the end of the week of recovery. So in today's video I want to discuss three main factors. Firstly, we'll give a brief overview of the current market conditions. We'll then look at my old portfolio on Trading 212 and see what I would do in this situation to take advantage of the current volatility in the market. And third of all, I'm going to give some updates on the investments that we discussed last week in the form of my new investment portfolio, crypto, real estate, ETFs and other. So if that interests you, be sure to stick around and let's get straight into it. So ever since the crash of March 2020, the markets have kind of went in one direction ever since, and that is up a fairly substantial bull run. And my overall portfolio, which we'll see in a few seconds on Trading 212, went up about 20 to 25% in that period of time, which is a lot considering they're all diversified blue chip stocks. So they usually don't go anything crazy there. For example, even the ETFs that I had in the form of the S&P 500 went up about 35%, which again isn't realistic at all in the long term. So again, something had to give, and as the saying goes, if something seems too good to be true, that usually is the case. But again, just kind of looking at the overall market over the last week or so, there has been a lot of fear and panic. Even when you go onto YouTube, you can see most videos are kind of discussing the potential of a crash. Now we can even see on screen here, the screenshot, that there has been a bit of a dip over the last week or so, and there has been a recovery at the end of the week, thankfully, for those investors. But again, there's kind of five main points that I listed down here after doing some research, and they have got to do with inflation. The jobless claims are on the rise. The Fed's economic growth isn't as good as expected, obviously, which will affect the overall market conditions. The Chinese volatility certainly won't help the markets either, and the kind of overall fear in the market certainly is getting people to sell off their stocks and shares, effectively driving down the price of the overall market. And again, the S&P 500 is the main indicator here, but it has recovered ever since. So again, we'll kind of go through my old portfolio now in Trading 212 and what, in my own personal opinion, I'd be doing at this moment in time to counteract the current volatility in the market. Now last week, as we discussed in the video in the description below, we sold my 33 stock/ETFs in my Trading 212 portfolio. Now again, we had about €10,079 overall deposited here, of which we made about €2,043 in capital gains here and €108 in dividends. Now it's kind of funny as well that we've still received about €8 or €9 in dividends since selling this portfolio, which kind of gives us an overall net return of about 2,100 or 2,200 euro in profit, which I'm very happy with. Now again, we'll discuss later on in a bit more detail of why I sold my overall positions. Again, I will be definitely getting back in, but it's kind of mainly got to do with real estate, which we will discuss later on. But it's crazy to think that an overall 33 diversified blue chip portfolio went up about 25% in profit. Now, usually you'd expect this to probably go up 5 to 10% a year at most, considering the diversification and safe approach here. There was no volatility or there was no risky kind of stocks at all at play here. So that's kind of why I find it bizarre that it went up so much. And ironically enough as well, the day after I sold my positions, the market did start to tank a bit. So that was all due to luck. Obviously, I wasn't able to tame the market, but thankfully it worked out pretty well. But again, we'll kind of have a look now at my own plans or what I do in this situation if I still had this portfolio to take action of the current volatility. So it's no surprise as a long-term investor that the markets have to move up as well as down to make it a healthy market, and markets are cyclical, which means they need to go up and down in value. Again, mainly to not go overvalued or to have too much of overvaluation, hence why there is stock market crashes and stock market kind of bull runs as well. Again, this is all healthy action and it needs to happen. So obviously, since the markets have been in a bit of a bull run over the last 18 months, it's no surprise as well that they have to give at some stage, and there will be a bit of a sell-off. Now I know over the last week there hasn't been anything drastic happening, but again it is kind of giving a bit of warning signs. So in terms of if I still had that portfolio, there's a few things I'd kind of have as advice. Now obviously it's not really financial advice, it's kind of advice to myself. But what I do is obviously you don't lose money unless you actually sell a stock. So again, it's a long-term approach here, and the markets will be going up and down literally probably 10, 20, 30 times if you are a long-term investor over the next 10 to 15 years. So again, you need to get used to this, and emotion is key here to be able to control your emotions and not panic sell, or if there's a fear in the market, like as Warren Buffett states, that you should be kind of fearful when others are greedy and be greedy when others are fearful, and this could certainly be the case going forward. So if I did have this portfolio, I'd pretty much be doing the exact same thing I've done the last 18 months, which worked out pretty okay for me, and that is dollar cost averaging. Now, basically, in a nutshell, it kind of states it kind of explains itself, I guess, where I'll just literally be buying the dip. So this kind of involves being cash heavy as well, and certainly in the coming months, you should really be cash heavy. Now, I don't really mean start selling your positions at the moment. It's just to kind of start building up a cash reserve, ready to take advantage when the markets do and inevitably will drop in value. Again, that always has to happen. This isn't a kind of a fair kind of video at all to kind of get you to panic sell at all. I'm just kind of stating the obvious that it has to happen. So what I'd be doing certainly in this situation would be dollar cost averaging and slowly drip feeding funds in like I've done in all my prior videos, which again are all in the description below. For example, if just let's say Apple was $100 today, it dropped to $90, like I wouldn't be putting all my available cash in at once. You slowly drip feed it in. And again, fair enough if it went back up in value, because that means you have to get in at a much cheaper price, which in the long term will give you even bigger value. So that was just a very brief overview of the current market and what I do in that situation in my own personal investing. Now let's give kind of very brief updates on the 5 new investment vehicles that I discussed in the description below as well in my prior videos and my new investment plans going forward, and the first of these being real estate. Now again, in the prior videos we stated the real estate investments will be split into 2. Firstly will be my own family home once we buy that, and second of all will be an investment apartment, which obviously we'll be using to rent out and use that money again to reinvest over time. But again, that's my kind of 2 main kind of investments in real estate here, and kind of there's no update on the investment apartment as of yet, as we do want to put that in the back burner for now, as we do want to kind of put all our kind of eggs into the main family home, as that's kind of more important than anything really. So kind of an update there is that we're currently still in talks with a few properties that are still undergoing planning. So I'll kind of have more updates probably would literally the end of this week, maybe the start of next week, in terms of a property we probably will actually end up buying. So again, there's not much updates there as of now. And again, in terms of my investment apartment as well, there's not a whole lot of updates here, as again, we won't be touching this until the family home is sorted. Now, just while we're on that topic, actually, again, comment in the comment section below if you'd like a few videos in terms of mortgage or houses in general. For example, if you want to discuss the budgeting behind actually buying a house, or the kind of process, especially in Ireland here, if you are planning on getting a mortgage, the kind of steps you need to go through, and even my own savings and how we saved X amount of money over the last 3 to 4 years, which I'm quite happy with the amount we've actually saved, considering. So again, if you like videos like that as well, please comment below and I'll be sure to kind of start a playlist on that as well. So the second investment vehicle update is kind of uncharted waters for us as such, in the form of crypto. Now again, in prior videos we did state that we're going to use Coinbase as the broker of choice here. Now we haven't opened that brokerage yet, mainly because I am still mainly focused on buying that house, and once that is fully sorted, now that's probably the main reason as well why we actually sold the 13,000 euro stock/ETF portfolio, is because I did want to have as much capital as possible to kind of have upfront for that house, which means the mortgage will be less. So obviously over the long term you're actually making even more money that way. So that's kind of my whole purpose behind that. So again, once that house is sorted in the coming weeks, we are going to start pumping into these other investment vehicles, and crypto will be one. So we'll probably invest in the 3 main coins probably at this moment in time. Now we probably won't be putting anything crazy in, because admittedly I don't know a whole lot about crypto, so it is going to be a learning process, and I am going to approach this just like I did with my stocks/ETFs, where buying tiny amounts at the start and slowly drip feeding in, kind of feeding off the volatility and buying the dip as such. So again, that's kind of the brief update there, even though there's no such update as stated. But again, I'm looking forward to starting learning and investing in crypto over the coming weeks. Now the third and fourth investment vehicles will be kind of ones we have been doing all along in the form of stocks and ETFs, but we'll be doing it a bit differently. Now mainly will be brokers and kind of spreading out my capital across a few different brokers. Now we will be investing in stocks and ETF. So obviously the stocks, I want to have dividends and growth, and I want to have those in 2 different portfolios. So again, as stated in prior videos, we'll probably be using a DeGiro, which is a European discount broker as well. We'll probably be using them for my more dividend kind of plays. And again, I probably want to have kind of the 10 main dividend stocks on that portfolio. And then on Trading 2 and 2 are all reliable here, we'll probably have 10 to 15 growth stocks where we'll dollar cost average in as well, just like we've been doing all along. Now unfortunately on DeGiro you cannot dollar cost average in as such as effectively, because you can't buy fractional shares. So you need to have more capital at play take advantage there. For example, if you wanted to buy just like the Coinbase here, because on screen if it's $231 at the moment, now you couldn't buy 1/10 of a share for, let's say, $23 on the Giro, so you'd need to have the $231 upfront. So that's kind of the drawback of the Giro, and that's one of the main reasons why I do want to have a few different brokers, because you kind of get the best of both worlds by having different brokers at play. So that's kind of the update there. And again, just like crypto, we will be waiting for the house to be sorted before we know how much more capital I have on the sideline. I know obviously once, because I've been pumping in the majority of my money into the mortgage fund or into savings for a house over the last 3 or 4 years, once that's actually bought, I'll have a lot more capital at play, so we can really kind of go full on into the investing into stocks and dividends, and we'll probably be back up to the €13,000 in no time. So I'm looking forward to kind of getting that back at play here. Now again, the ETFs, I'll only be investing in one going forward, and that'll be the S&P 500. Now I was planning on using Vanguard, the main overall Vanguard itself, but again, I'm kind of still in discussions with that, because if you do use that overall site, you need to have a large amounts of capital invested even to open the broker. Now I could be wrong, and please correct me in the comment section below, but I'm pretty sure you need to have 3,000 minimum in that account before they'll even accept you, because obviously it's not one of these kind of discount brokers, it's a fairly kind of professional style brokerage. So again, a lot of people are commenting in videos stating that I probably should just use trading 2 and 2 if I don't have thousands upon thousands invest in ETFs, and probably wait until I have a lot larger amounts of capital at play before investing in the likes of Vanguard on their site. For example, probably you shouldn't be investing there unless you probably have about 20 to 100,000 euro or pounds / dollars at play there. So I might just start off. Again, I need to see how much we can actually invest or start off investing, and kind of come up with my plan and decision there. But again, it's all pending the house as well. So all the crypto stocks and ETF will be kind of at hold here over the next few weeks. But the second that house is bought, we'll be full steam ahead with the 3 of those. And the 5th and final investment vehicle, which we discussed in the prior video, was YouTube / other businesses in terms of bricks and mortar style businesses. Now again, even though YouTube is free to actually make videos on, it is time consuming. So as you can imagine, having a full-time job, obviously planning the wedding, having a house to buy as well, honeymoon, etc., and everything else that life throws at you, it's kind of very difficult at the moment to be making consistent videos, hence why there has been a bit of a lack of uploads. But again, once the house is bought, I'm really looking forward to having a room in that house to kind of have as a YouTube kind of room as such, or a studio. So I'm really looking forward to kind of kitting that out as such. And we'll probably make a video on that as well, when I'm actually doing that in terms of the process. Because at the moment I'm currently just sitting in the front room, and obviously even in the background here, there's nothing that really stands out as such. So I'm looking forward to having a decent enough background and a kind of studio as such to start making videos. And obviously once the house is sorted, I'll have a lot more time on my hands in the evenings or the mornings as well. So I'll be able to make a lot more consistent videos. And obviously, again, the other kind of brick and mortar style business will be on hold as well, because I need capital there to take advantage of that business. So again, that all is pending the house. So I'm really looking forward to giving updates, because I don't think it's kind of the right time to give updates on that as such now. So I'm kind of eager to give updates on that over the coming weeks as well, once that kind of kicks off. So that's pretty much it for today's video. Again, I just wanted to touch base and give my own thoughts and opinions on the current market conditions, and a bit of an update there on what I do personally in this situation. And I want to give updates on the 5 new investment vehicles that I'm planning to invest in over the long term. So I just wanted to give updates there. Even though there wasn't a whole lot of updates, I still wanted to give you guys a kind of a perspective of where we're at with each of those 5. And again, over the coming weeks, as stated, I'm hopefully having that real estate ticked off, and I'm looking forward to giving you updates on that. So with that being said, that's the end of today's video. I hope you enjoyed it and gained some bit of value. Enjoy the rest of your Monday, and I will see you all in the next video.